The federal government and the Central Bank of Nigeria have jointly launched the Disinflation and Growth Acceleration Strategy, a two-year plan aimed at reducing inflation, boosting GDP growth above 7%, and doubling household incomes. Announced by the presidential aide Dada Olusegun, the initiative seeks to align fiscal and monetary policies through a single-window execution platform that integrates development, finance, private investment, project incubation, and performance management. DGAS will also prioritize energy diversification, expanding oil, gas, solar, wind, and hydrogen capacity to power industrial growth. The launch follows new data from the NBS, which reported headline inflation dropping to 18.02% in September 2025, the lowest in 3 years. Joining me from Abuja is Samuel Oyekanmi, Research and Insight Lead at Norrenberger Financial Group. Thank you for your time.
Thanks for having me, Joanna. Good morning.
Yes, good morning to you. And there appears to be a plan for the next 2 years. At least we're not focusing on the elections, I hope. So yes, the plan for the next 2 years, a new disinflation and growth acceleration strategy. Tell us more about that and how realistic are some of the targets, such as a 7% GDP growth and single digits inflation?
Yeah, I think it's quite interesting. Of course, when you get towards penultimate years to elections, a lot of things tends to happen, especially when the incumbent is someone who probably would want to return to the seat. So I think this is quite interesting. Like you said, there are quite some ambitious targets. And again, I think that this administration has rather been quite ambitious even from get-go. Remember that we're still talking about the whole $1 trillion economy by 2030. And to be fair, right, in order to be able to achieve that milestone by 2030, we really need to record some significant growth. On paper, it's really quite interesting. I see some of the key pillars that has been stated even by the essay to the president on social media issues and things around tight fiscal and monetary coordination, right? I think one of the issues that have been in time past has been the fact that there seems not to be a significant synergy between the monetary and the fiscal part of government. And I think what they are trying to do going forward is that to ensure that the two bodies really work in alignment, and hopefully that can help to mobilize some private capital that also help to develop significant parts of the economy. If you have that, the chances are you can achieve that growth that you right now we're seeing around 3 to 4%. We really need to double that if we are to hit the $1 trillion economy by 2030. So I think on paper it is interesting, it is ambitious, but quite a number of things will determine if a number of these stipulations will be met, especially in terms of single-digit inflation from 18%. So quite a number of things really need to be done in terms of the implementation phase.
And implementation, lifting it from paper, and from there we talk about coordination. So how will the DGAS, what are we calling now, DGAS, single window execution platform, how will it practically coordinate both fiscal and monetary policies so that they're not two things working differently that never marry? So that's the CBN, the Ministry of Finance. How can we see that coordination to actualize this goal?
Yeah, I think that's quite interesting with the single window execution platform, right? I think one of the things that we've seen in the last 2 years or so is that the fiscal side, Ministry of Finance, and then the monetary side, CBN, have tried to be in alignment as much as possible, coming up with pronouncements that seem to be like in one voice. And I think this might be a step in the right direction. But of course, again, implementation is always an issue. So it looks good on paper, and we all appreciate the fact that we want to be able to aggregate financing to deploying them into major parts of the economy to drive growth. But then when it comes to the actual implementation, what I would expect, which we have not seen, right? But of course, these are just the initial stages. What I would expect at some point is that we're going to have like a joint governance committee that would involve senior officials from the CBN and then the Ministry of Finance working together to be able to ensure that at every phase of projects that they identify, they want to deploy funds to, they're both in alignment. And this would also help, for example, budget allocation on the part of the fiscal side, and as well the CBN in terms of ensuring that they're also managing liquidity in a bid to tame inflation as well as interest rate movement. So personally, for me, I would love to see, and I think it should be a no-brainer that would have a joint governance committee again that would also house quite a number of things. Would even have independent parties also, because for you to enable or to ensure some level of transparency and oversight. I think that would be my expectation of the two terms.
This inflation and growth acceleration strategy, their goal is inflation targeting, right? Single-digit inflation, GDP growth acceleration. They have their goals, but how is this going to, beyond just numbers changing? That's if they do achieve the numbers, if we do achieve the numbers, how is this going to have an impact, a direct, immediate impact on Nigerian households and businesses, except from just the strategy?
Yeah, I think we here in Nigeria now, we are. I mean, I think it's a good thing that we're now looking beyond numbers and trying to see how some of these numbers really translate to human capital and then human lives, right? For me, looking at this policy, right, I think I'll look at it from a short term and then from a medium term point of view. One part from a short term point of view is that we need to see significant decline in inflation. And this is not just from a numbers point of view. We also need to see it reflect in prices of household commodities, right? And this is a function of, for example, food, which happens to be a major part of of inflation in Nigeria. We need to see supply soar significantly. And that means when you're raising some of this capital, a number of them will be deployed wholesomely to the agricultural sector in a bid to drive supplies significantly on the upside, right? And that should drive prices downwards. That would be my first area that I would really want to start seeing this affect individuals and businesses. And then on the short to medium term or medium to long term, I also want to see significant job creation. If you want to achieve as much growth as to 7 times as we want to see now, we really need to have a lot more people in the employment bracket. We need to see very good type of jobs, not just the purple collar or brown collar jobs, as you call it. We need to have a lot more sustainable job creation in the country, and that's a function of both local and foreign capital deployment into real sectors of the economy. I think when we start seeing that, right, we can start understanding how some of these numbers might have impacted humans. Again, inflation really needs to go down, job creations really need to be important, and as a result of that, we're going to see real incomes of individuals and businesses also improve.
Right, and there are various targets here. There's a mobilization of private capital. And we're going to get into that in just a moment as part of this strategy, 2-year strategy. Stay with us. The central bank has unveiled a disinflation and growth acceleration strategy to double incomes and cut inflation for the next 2 years. We have joining us Samuel Oyekanmi. He has been providing us quite some insight into this development. And we know that a part of this target, this strategy, is the mobilization of private capital. And of course, we know there are already questions around transparency, accountability with public funds, public capital. So how can we ensure, as you're looking to mobilize private capital to drive some of these goals, we're seeing that transparency and accountability?
Joanna, right? When it comes to accountability, transparency in Nigeria, I think that has been a major bill, right? And then it's just like the other side of what we term corruption here in Nigeria, really. And in a bid to ensure that this DGAS really works out, there really needs to be the intention, clear intentions that we want to be transparent and accountable. And for me, from a third party's point of view, I would expect that there seems to be like an online platform that ensures that everyone, all stakeholders can see what is being done at every point in time. It could be termed something like a public project pipeline or a dashboard or something like that. And this ensures that every stakeholder can see project selection, who are the financiers, what do we have as part of disbursement, what's the KPIs, and what are the outcomes. Oftentimes, you see, the last time we're talking about project implementation report, budget implementation report, which we have not really seen in recent time, and this speaks to the level of on transparency, or as the case may be, or on accountability in Nigeria, and that pretty much erodes social trust. I also think that we could also have, and I think I mentioned that earlier, right? We could have independent third parties who audit this process from the initiation even up to the point of implementation and then result. I think that can also give some level of credibility, and also ensure that everyone who is involved really sits tight, right, and ensure that what needs to be done is done. And with these two things, I think we can start seeing things around clear procurement situations, PPP standards, and whatnot, and ensuring that most of the projects that you embark on, you really see it through to the end, and they don't just sound like political statements in a bid to gather votes for elections.
We hope that's not the case, definitely. But we know that if you're talking GDP, you're talking productivity. And one of the things that has held us back in terms of productivity is the lack of power, the power situation in the country. And, you know, is that being addressed in this strategy? Are we hearing things about energy diversification within this strategy, solar, wind, hydrogen? How does it play in this whole drive for industrial growth?
Yeah, definitely. They mentioned at least one of the core pillars was the area of energy diversification. I think that's quite apt, right? I think about 2 years ago was signed, the Electricity Act was signed, which gave opportunities for individuals, businesses, and states to also have that autonomous power to be able to generate power. We've not really seen that materialize significantly in the last few years. But I think an intentional act from both the fiscal and monetary side of the government to ensure that we're able to diversify power. One, in a bit to lower the cost of energy for Nigerians, which has really been a major gain for businesses, especially in Nigeria. Two, also from the sustainability part of things, so that we also see ourselves moving away from dependence on biogas and moving to some other renewable and sustainable source of electricity. I think it's going to be quite interesting. But again, major question still goes back to implementation. It really looks good on paper, right? But again, how then do we ensure that these initiatives are brought from start to finish, and then we feel the impact as an average Nigerian?
And I think the question now is how. This is not the first time we're hearing of one acronym as a strategy, you know, to tackle, you know, GDP growth and inflation. So how does this DGAS differ from previous economic recovery and growth strategies that failed to meet expectations?
I think that's an interesting question, right? So I think one thing that this initiative has over previous one is the single window platform that allows for the fiscal and monetary policy. I don't think we've seen many initiatives whereby both the fiscal and monetary policy are really in on it together as a whole, right? We've seen the CBN do theirs, the Alcohol Borrowers Fund. We've seen Ministry of Finance also have quite a number of things around housing and mortgage and all that. But having them come together, I think it might be a good step that would ensure that we see some positivity. But again, if you go back to the past and some other initiatives that have not really lived up to their expectations, you see things like weak project pipelines, which discourages private capital, right? If you really want to incentivize private players to come into financing projects that help develop economy, you really need to ensure that you have great project pipelines, and there needs to also be strong governance. So for me, I would flip it and look at it from what this initiative should be doing better to ensure that we don't experience same thing as the last one. So we think around strengthening governance, which I mentioned, having third-party independence auditors also for it. could also be good. We have things around delayed budgeting. It's surprising that as of November we're still talking about 2025 budget. At this point, we should already be imagining what 2026 should look like. And 2025 it appears that we don't even have that clear cut. A case in point is what is happening in the US concerning the shutdown of government as a result of budget again. So I think we need to start tightening those loose areas. Things around security constraint, again, it still remains an issue which could deter foreign capital from moving in, especially in terms of foreign direct investment. So I think when we start identifying and solving some of these bottlenecks, we should be able to achieve better than the previous initiatives.
All right. Hopefully we do identify and resolve some of these issues. And looking at the strategy, are there particular sectors that perhaps stand to benefit the most from this DGAS-led investment and reforms?
Yeah, I think a number of sectors will gain from this. First, again, we just mentioned the energy side of things. So energy and power, of course, would have direct benefit from this initiative. But then beyond that, you want to be able to deploy capital to real sectors where jobs can easily be created, and then it won't be far-fetched when you start looking at things around manufacturing and industrialization, construction, things around agriculture and agro-processing, looking beyond just agriculture and then around the entire value chain, things around logistics and telecommunications too. These are areas where a lot of jobs can be created. I think capital being deployed in these areas, of course, would have some substantial impact on the gross domestic product, and beyond that also on real incomes for Nigerians.
Mm-hmm. And I mean, we look forward to seeing how all of this pans out. Thank you so much for your perspective. Do stay with us nevertheless. It's still Business Edge, and of course research and insight lead Norrenberger Financial Group, Samuel Oyekanmi. The National Assembly has approved President Bola Tinubu's request to borrow 1.15 trillion naira on Wednesday to cover a shortfall in the domestic financing of the 2025 budget deficit. The president explained that the deficit, which now totals 14 trillion naira, resulted from the National Assembly expanding the executive's proposed budget from 54.74 trillion naira to 59.9 trillion, a 5.25 trillion naira increase. The funds are required to increase the domestic borrowing limit. The approval mandates the Ministry of Finance and the DMO to ensure the borrowing terms are favorable, transparent, and sustainable, with oversight from the Committee on Local and Foreign Debt.
The committee notes that a budget of 59.99 trillion was passed in 2025 Appropriation Act. Based on the above findings, the committee recommends, one, that the Senate do approve Mr. President's request to establish a 1 trillion naira 150 billion naira borrowing program in the domestic debt market to close the unfunded deficit gap created by the increase in the budget size over and above the prior approved revenue and borrowing plans.
Still with me for this conversation is Samuel Oyekanmi, Research and Insight Lead at Norrenberger Financial Group. Thank you for staying with us.
Yeah, thanks, Joanna.
Yeah. What would you say are the key drivers behind the expanded 2025 budget that created the 14 trillion naira deficit?
Yeah, I think it was pretty much mentioned even at the National Assembly, and I think it's part of the initial plan, because following the increase of the budget from almost 50 trillion naira, that gave about a deficit of 14 trillion. But of course, in that plan, it was only about 12 trillion, which leaves you a gap of a little over 1 trillion. And what the federal government is just trying to do is to make up for that gap. But then again, you look at other things around revenue shortfall also. Don't forget that crude oil benchmark for the budget was about $75 a barrel, and it has pretty much traded around $65 to $67 a barrel. Production have also not lived up to projected estimates. So of course, what it means is that revenue will have dipped compared to anticipation. And what, of course, you expect is that government will need a lot more funding to be able to meet up with the deficit, and that's exactly what we're seeing playing out, very much.
And I'm sure there'll be concerns about Nigeria's debt to GDP ratio and long-term fiscal sustainability with this move. So how will this additional 1.1 trillion borrowing impact that?
Yeah, of course, debt sustainability continues to be a major really fair when it comes to the Nigerian environment. And this additional borrowing following additional Eurobond a couple of weeks ago means that Nigeria will be carrying a lot more debt. When you look at it from a GDP standpoint, it might not necessarily be that significant because it might just be about 0.31% of nominal GDP. But then when you look at, for example, your debt to revenue ratio and other ratios that can help you to see how liquid you are to be able to repay these loans in the short term, tells you that they're not quite friendly. And I think governments, of course, will continue to borrow. I don't really see that changing anytime soon. But then these borrowings really need to be channeled towards productive sectors, really, that can help repay themselves in the short to medium term. I think that's the only way we can ensure some level of sustainability in terms of our debt practices. And then moving beyond that to ensure that there's a level of transparency and accountability for what these funds are earmarked for when they are being borrowed. That way, we can have some pretty much governance around borrowings going forward.
Indeed, much needed. And let's look at the current interest rate environment. Would you say domestic borrowing is still the most cost-effective option?
I think when it comes to borrowing, you want to look at many variables, right? And it's not just interest rate alone. So you have domestic, you have foreign debt. For the foreign side, you are exposed to FX risk, which one of the mandates of this administration is to maintain the strength of the naira, right? And which means that you always want to measure your exposure when it comes to foreign exchange FX debt. Locally, right? Yields are high, but what we see again is that interest rates are beginning to slow. And I think the DMO, of course, I think the National Assembly also had given the mandates to the Finance Ministry and then the DMO that they should ensure that the pricing for the borrowers are airtight to ensure that it is well in line with what's favorable to the Nigerian economy as a whole going forward. But then it's not just interest rate you want to look at. You want to look at maturity profile also, liquidity concern, and then FX. Again, businesses or as a country, you want to have an ideal mix of both domestic and external debt. And I think the DMO should, of course, be doing that when they compute some of these numbers.
Mm-hmm. And you brought this up earlier, matters of transparency around our debt. So how transparent would you say Nigeria's debt management process and how transparent would you say it is? And will the DMO's oversight perhaps also ensure some level of accountability?
Well, so on if you look at it just blanket, right, we would say the DMO has been transparent. And what they do is that they report debt stock at a point in time. And then we see things around issuance of debts, there are different papers and how much was offered, how much was raised and all that. And I think that we could give them credit for that, but I don't think that is enough because for decision making and then to understand the level of work, to appreciate the level of work that goes into some of these debt management, people and other stakeholders need to really see beyond just the bottom line. They really need to see some of the other components. So for example, you have raised 500 billion at this particular issuance calendar. Where has this money been? What has it been used for? 30% was used for servicing previous debt, 20% was used for recurrent, and these are the areas it was moved to. 20% was used for capital expenditure, and these are the projects that it was used to finance. And on the back of this is the level that we have gotten to with this project. projects. We don't have that. And like I mentioned earlier, there is the budget implementation report that usually would serve as some level of guide for Nigerians and other stakeholders to understand how budgets has been panning out and the levels and what has been spent and whatnot. We have not seen that in recent time, and that makes you just act in darkness, because if we don't have that, then there is really little or no trust for the system. So I think the DMO really needs to also start looking at ensuring that we have better accountability, transparency on how monies are raised and how they are used and how they are paid back. I think that would also strengthen even the debt market as a whole going forward. So of course, yes, DMO has done quite a lot, but they need to do more to ensure that accountability is ensured.
Indeed. And also concerns with this loan, the impact it will have on inflation. Do you also see it crowding out private sector borrowing?
Yeah, that's very possible. We have maintained high interest rate environment for the better part of 2 years. And what we have seen is that a number of private companies have been staying away from the debt market. You would see bond issuances for corporates have really dwindled in recent years. And as a function of the fact that the government is offering higher returns, and beyond higher returns, of course, your loans are pretty much almost secured. Of course, for businesses who don't have that same level of what I call it brand equity or corporate equity as the federal government, the chances are you will not be able to raise as much in the market, and that has really discouraged borrowing to the private sector. And don't forget that we also need this private sector fundings to be able to drive growth in the productive sector. So I think it's a balance of both. But yes, significant insurances from the government side has some level of impact on the private sector side of things. But I think both can also coexist, and that is a function of how large the financial system is. When you have a robust financial market, financial system that is quite efficient, I think both the government and private sector can be able to raise as much capital at competitive returns, and then that spurs growth eventually. In terms of if that's going to drive any form of inflationary risk, I think from an inflationary point of view, you want to look at are there any significant spending without the reciprocal supply in the market, which has been some of the factors that have contributed to the supply side, even the demand side inflation in Nigeria. But I think what the CBN has been doing in recent times is to ensure that they manage a bit around liquidity concerns to also tame inflation. And if they do that going forward, I don't really see any immediate risk to that. Most of the issues are always infrastructure. They are always structural in the sense, do we have as much supply of food? Is FX stable? Crude oil prices, are they low or high? And how does that impact energy prices in the domestic market? And a host of many other factors that really impacts Nigerians on a daily basis. I think those are the things that government would really need to start putting a tight leash on. And again, not to forget insecurity in that mix.
Yeah. Insecurity at the center of a lot of conversation these days with threats of intervention. But let's come to, we're just talking about the disinflation and growth acceleration strategy. How would you say this borrowing also aligns with the government strategy there?
Yes, I think from a basic point of view, I think it's pretty much aligned. The government wants to be able to raise funding to be able to push towards areas of the economy that drives growth. And borrowing is also one of the ways by which we do that. But unfortunately, I don't think that is, of course, it's not the best strategy. And I don't think that has really, the implementation is not even, we've not got into the implementation phase. This is just an area of just meeting up with budget deficits. Because again, eventually the DGAS is going to be largely driven by private capital, either from the domestic or from foreign investors. And I think that's how we are able to drive as much as 7% growth. Don't forget our budget is almost about we're heading almost to 60 trillion. And then if you go back to 3, 4, 5 years ago, our budget used to be around 14, 18 trillion naira. So it has really taken a leap. But how has that translated to real economic growth in the last few years? We've still averaged around 3%, 2.9 to 3%. It tells you that government spending alone cannot drive that growth. There's a significant need for private capital deployment across different sectors and value chains to be able to achieve that growth of 7% that the government has really projected. And I think that's where we are heading. Borrowing is just pretty much to meet government and shortfall.
Indeed. And we've talked about transparency, accountability several times in the course of this conversation. But let's come to the role of the parliament and civil societies in tracking the utilization of this particular loan so that we don't have any fiscal leakages and corruption.
Yeah, I agree with you. I think I somewhat indicated that the National Assembly had given mandates to the Ministry of Finance and then the Debt Management Office to ensure that there's some level of transparency and then pricing around the new borrowings of the 1.15 trillion. Definitely, there is a huge need for oversight from even the National Assembly, right? So that you have some level of political power also pretty much checking what the executive arm of government is doing, both from a fiscal side and from a monetary side of things. And this can be ensured by coming up, we have quite a number of committees, both at the upper and lower chamber, that can monitor debt sustainability, that can ensure transparency around this DGAS and accountability also. I think when you have that in place, and there is some third-party independent parties that are not part of the government, but can look at it again from a bird's eye view and without any form of attachment, that can critically also assess every phase across the chain. I think with that you can be able to improve the level of transparency and accountability, right, going forward. But I think I agree totally that from the Parliament's point of view, the National Assembly as a whole really needs to also be involved at every point.
Indeed. Thank you so much for sharing your thoughts extensively on the show today. Samuel Oyekanmi, Research and Insights Lead at Norrenberger Financial Group.
Thanks for having me.
Yeah.